Now, from overpaying your mortgage, maybe you're thinking about switching. If you're a first-time buyer, this week's Ask the Expert is Trevor Grant, who's the chairperson of the Association of Irish Mortgage Advisors. Trevor, good afternoon.
Good afternoon, Andrea.
Now, whatever your queries, send them in to us, or if you want to chat to Trevor yourself on air, give us a shout. 1800 453 106. That is the number. For first-time buyers out there, they're at this. The deposit is now saved or semi-saved. They're thinking of mortgage applications. Your kind of top, I suppose, 3 tips, Trevor, for people where to start.
I suppose, to be honest, and people probably think I would say this, but my top tip is to contact a mortgage broker. And the reason I'd suggest they do that is that not every applicant is the same and not every mortgage lender is the same. So a quick chat with a mortgage broker who'll go through your income documents and your bank statements will put you on the right path in terms of maybe some corrections you need to make for certain lenders or to qualify for the best rates, and also to advise you what level of savings, etc., you need to have when you make your purchase.
How are rates at the minute?
So rates are in a good place. They were very, very low for 11 years when ECB was at zero.
They jumped though.
And then they jumped quite significantly. So ECB increased by 4.5%. Thankfully, the home loan providers here didn't increase by as much. They increased by a little over 2% on average. But we've seen a little movement, particularly around the infamous green rates, which is a BER rating on properties of A1 to B3 in the last few weeks. And as recently as Friday, Avant Money, who don't differentiate between green and non-green properties, reduced their rates. So rates are in a good space, and historically they're in a reasonably good space.
What are the Avant rates down to now?
So the Avant rates now have dropped to as low as 3.6%.
Right, okay. So are you still, are you advising people to fix at this stage, or are you better off to go on a flexible at the moment?
It's an interesting question.
Or very,
So I go back to the point I made earlier that the banks didn't increase their rates by as much as ECB. So therefore, the banks are likely to tell us that they're not ready to reduce their rates when ECB start to reduce. So also, when you look at the long-term yields in terms of the European banks and generally in terms of Euribor, which is the rate by which many lenders borrow money, they're fairly flat looking forward. So anyone assuming home loan rates will fall will be making a mistake. They may fall, but maybe by not as much as many people think. If you're on a variable rate or a tracker rate, they'll absolutely fall. They'll probably fall quite substantially for tracker customers over the next 18 months, probably by up to 2%. But I wouldn't be taking a mortgage out on a variable rate simply because I was expecting them to fall significantly, because I don't think they will fall significantly.
So fix.
Look at your options, see what you're comfortable with. Maybe you have an overpayment facility, which you can have with certain lenders, but make an educated decision. Just don't back the horse because you think it's a sure thing. Yeah. Pick the mortgage that's right for you.
087 1400 106. Loads of questions coming in, so we'll fly through some of them, Trevor. Can you apply as a single applicant even if you are married? Also, is it possible to apply for a mortgage for a self-build again as a single applicant if the planning permission is in your spouse's name?
Okay, so they're quite technical. So I think the easiest way to give you the answer is, if you are on the title of the property, you must be on the mortgage. So in other words, if money is being borrowed on a property, the person whose name is on the title to the property must be on the mortgage. It is possible in buying a new property with a married couple for the applicant and the person whose name is on the title to be in single names, but that's got legal complexity to it. So yes, in theory, if I'm married, I can buy a house in my own name, but essentially my husband or wife needs to sign away their rights to the property. Not advisable. If you want to build a property, your name must be on the title and on the planning.
So as the single person, as a single applicant, I should say, in the marriage, you can buy the house. If you're drawing down the mortgage, it's your name and the deeds of the house. Correct. Yeah.
Yeah. So your husband, wife is signing away essentially their rights in the property, and that can lead to longer term conflicts down the road because obviously you're
conversation,
married, right?
Wouldn't it?
Yeah. So it's not advisable. It would be done in very exceptional and unique circumstances.
Okay. And on the self-build, on applying for a mortgage for a self-build, again as a single applicant, if the planning permission is in the spouse's name.
No, the planning permission needs to be in joint names, yeah.
If I'm on maternity leave and I'm still getting paid, but it's reduced, will this affect my mortgage application?
No. So the way it works with the lenders is 2 ways. If you're on maternity leave and your pay is reduced, the lender can work off the reduced pay, or they can work off your full pay, provided they have a letter from your employer confirming the date you're going to return to work and what your terms and conditions will be at that time.
So if you were thinking perhaps when your maternity leave is up that you might take, an additional 2 months unpaid or something like that, that could become an issue in this instance.
It could do, but lenders have become very reasonable in this regard. So as long as they have a letter from the employer confirming the return date, and that the terms and conditions either will remain unchanged from when you went on maternity leave or are revised, generally an application will be approved.
Okay, 1800 453 106 if you have a question for Trevor Grant today. How do I go about overpaying my mortgage, and is it worthwhile? I got a bonus this year and I'm wondering how best to use it.
So in principle, overpaying your mortgage is a really good idea because it reduces the interest you're paying and brings your balance down quicker. And the goal for most people is to clear their mortgage as quickly as possible. Different lenders have different rules around overpayments. Some facilitate it in the contract of agreement. Other lenders only allow it when you're on a variable rate and not when you're on a fixed rate. So it's very important, if you're thinking of overpaying, that you contact your lender and ask them to confirm, can you overpay as you wish, which you can on a variable rate? And if you're on a fixed rate, is there an agreement as part of the loan offer to allow you to overpay? Or indeed, can you overpay regardless because you're on a fixed rate? Ultimately, lenders can only charge you for overpaying or breaking a fixed rate if they're incurring a loss in you doing so.
Okay. Interesting question here, and maybe it's something you touched on earlier as well, Trevor, just for a moment. I saw it there. What are they looking for when they're going through your accounts? Is it true that you can't have a betting account?
No, that's a bit of a myth. So if we go back to the times of the crash when lenders really weren't lending, if you were showing any sign of consistent betting or gambling, an application was generally declined. But it's accepted now that, betting is to a large extent a way of life and everyone likes a little flutter. So as long as your betting is not very significant and it's infrequent, there's nothing wrong with having a betting account, so long as it's manageable and reasonable.
Do you need a mortgage broker? Can you do it on your own? I don't want to spend more money than I need to. You might want to clarify that.
So key here is that your own bank may have the best deal for you. The bank you've been with since college or when you left school may absolutely have the best deal for you. However, unlike a mortgage broker, they're not obliged to tell you that better terms exist elsewhere. So unless you have the wherewithal and the technical understanding
and the time
of going, and time, most importantly, Andrea, of going around 9 lenders to understand what they offer and compare them, you're absolutely better off getting market advice from a broker, and you may end up going back to your original lender if they are the best for you.
You don't pay the broker though, as in the applicant?
No, again, there's a myth that suggests that because lenders pay brokers commission, that brokers don't charge fees. So Ireland's very unique and it's a really good setup for consumers. All lenders pay commission to mortgage brokers.
Yeah.
All lenders pay the same level of commission, so it removes any question of bias. And the commission doesn't impact on the rate the consumer gets. So the lender is paying the broker ultimately for distribution. Some brokers do charge fees, increasingly in a market where you can do a lot of work to get people approved, and through no fault of their own or yours, they simply don't find a property because we have a housing shortage. So some brokers do charge fees. Brokers are required to be very transparent. Before you engage with them and start submitting documents to them, they're obliged to send you their terms of business, and that will call out the fees. Most brokers don't charge excessive fees, and the vast majority would only charge them on receipt of an approval. So if you like, they've done their work, their hard work, and then it's up to you to find the property.
Is that new that most brokers are charging fees?
It's become an increasing feature of the market over the last 5 to 6 years.
Right,
now, by fees, you're talking a few €100, not thousands of euros. And if you think of it, if you wanted to get really good professional advice from somebody, you'd expect to pay a fee. But not all brokers charge them. Some do. They need to be transparent. And many return them, by the way. And just because a broker charges a fee doesn't mean they're a bad broker. It just means they value their time and they may ultimately give you the best advice.
Yeah. Do you get penalised for switching? Asks this texter.
The only way you can be penalised for switching is if you're breaking a fixed rate agreement. And by breaking the fixed rate agreement, the lender is incurring a cost. So if you're thinking of switching provider, you may have no penalty. If you're on a variable rate, you certainly won't. There is a chance if you're on a fixed rate that you would, and you need to clarify that with the lender. But the vast majority of people who have switched over the last 2 to 3 years didn't incur any penalty because the lender wasn't incurring a cost.
I know a few people I know who've switched in recent months, just inquired off their bank, and actually just nearly on the given day they rang and were told, no, there's no charge or no break penalty.
So that's because of the cost of funds.
Okay.
So currently lenders aren't incurring cost. So therefore, by breaking the fixed rate, generally there is no fee, but you need to check out first.
Okay.